Good morning, students. Welcome back. So today we will continue with our discussion on impairment. Okay. Now let's do a quick recap of what we discussed in the previous session. Yeah, so first, now what is impairment? Okay. And why do you have this impairment? So any thoughts quickly? Anyone? What is impairment and what are the reasons? So we discussed about it, that when it comes to impairment, so we can say that it's about the economic benefits which you expect from an asset and the carrying amount at which it is appearing. So when you see the carrying amount below the expected economic benefits, that's when you can say that it's about the impairment. Correct. So it's a kind of provisioning. Now, what are the factors you'll have in relation to impairment? So there are various factors you may have. Once again, we do not have any listing as such, right? But if you have to look at impairment, so those factors could be internal or external to the entity. Important part is what? One needs to take care, one needs to look into those factors, basis which impairment may arise. Okay, so it's not necessary that if you look at those factors, you will always find impairment. Correct? Impairment may or may not arise. What is then important is once you come across those factors, you evaluate that. So how do you evaluate that? So that's what you call as impairment testing. Now, in case of impairment testing, what do you do? Can somebody explain? Yes, over to you. What do you do in case of impairment testing? So how do you test for impairment? Over to you quickly. Who will answer? Everyone, how do you do the impairment testing? Yes, it's very important.
So, when carrying amount is higher than the recoverable amount, then we
Very
will
good.
do impairment.
Very good. And if you can just continue on this further, what is recoverable amount? How do you compute it?
Recoverable amount is when the sales value and the value in use and the fair value, whichever is higher, that amount is recoverable amount.
Very good. So when you compare this carrying amount with the recoverable amount and the carrying amount is lower. Okay. In such a case, there is no impairment. But if in case the carrying amount is higher, what does it indicate? That its
Impairment is
economic
existing.
benefits which you expect to receive are lower than what you are recognizing in the book. So that's why you need to bring it down to the recoverable amount. And that's what you call as impairment also, wherein you create a provision, kind of. Okay, and where do you take the impact? Impact goes to P&L, right? Now, as regards this impairment, I think we looked at some examples. And in relation to impairment, we also discussed how do you compute this recoverable amount? What is this value in use? What is this fair value less cost to sell? Okay, and how do you compare this to the recoverable amount? Further, we also discussed about another term, CGU. Now, what is CGU? We can say it's a unit that is capable of generating independent cash flows in the entity. Can somebody explain why is this CGU required? What's the relevance of a CGU? Yes, over to you. Anyone? Why do we get on to a CGU? Where do you need this? Yes, quickly. Okay, Akila says about the definition. Good. But I'm asking you about the need. If let's suppose we are talking about impairment. So what is the relevance of this CGU? Where do you need that? Why is this required? Yes, any thoughts?
Good morning, sir.
Yes, good morning.
I'm Harshal, sir, and need for the CGU for the identify the CGU because the industries and the business have can't it's not a exact key. They identify the each units independently and the measure the impairment loss or no even if we find individually, but AS said key we identify the CGU independently, but in practical manner it is not possible.
Hmm.
Therefore we requirement as a make as a whole means we taken all group of we identify the all group as a CGU and compute the per cash flow per unit. So we probably it means we estimated that. So that is the cash generating units.
Good. I can also see some responses from Dhanlakshmi, Sridhar, Pavan, Gambhira. Good. So now, as regards this CGU, we have understood why this is required and how do we make use of this CGU for the purposes of impairment testing as well as for the purposes of impairment allowance. Okay. Now, how do you identify CGU? That in itself is very important because if you don't identify CGU in an appropriate manner, then this entire assessment may go wrong. Now, let's move further. Now, we will continue with our discussion in relation to impairment testing and in relation to provision for impairment, means when you recognize this. Now, in this case, there's one more aspect about goodwill. So let's try to understand that if let's suppose entity has goodwill, how does it impact this impairment assessment or this accounting requirement? See, if in case entity has goodwill, okay. Now, if we talk about goodwill, can we say that goodwill is capable of generating independent cash flows? Answer is no, not possible. Okay, and therefore, what do? For goodwill also, you'll do the impairment testing. Goodwill is also an asset, right? Now, in case the entity has got goodwill, now there are two ways to look at goodwill. Generally, when you talk about goodwill and some of these entities that you look at in respect of goodwill, you would have found that goodwill is appearing as a item in their financial statements, but actually this goodwill may be belonging to a particular unit. It's not necessary that goodwill pertains to this entire organization as a whole. Yeah, what does it mean? Let's suppose entity has got 3 units, say PQR. So when this P was acquired, that's when the entity had goodwill, because that's how you have the goodwill. When you acquire the business, that's when you get the goodwill, right? Now, now the question arises that if let's suppose entity has goodwill and there is impairment, in such a case, how do you allocate this impairment? Okay. Now, in this case, two approaches are possible. Okay, or you can say we may have two situations. Now, what are those two situations? See, either you will be able to allocate the goodwill on a reasonable and consistent basis. If you do that, if you are able to do that, then you will perform bottom-up test. Otherwise, you will perform bottom-up and top-down test. Now, you may be thinking that what do you mean by allocation of goodwill? What do you mean by these two tests? I think this can be best understood with the help of examples. So that's why we will try to get this clarity by taking these examples now. Fine. And I'll need your attention because this can become slightly tricky. So let's look at this example. Okay. At the end of 2000x0, entity M acquired 100% of enterprise Z for 3000 lakhs. So which entity is acquired? Entity Z. Purchase consideration was 3000 lakhs. And this entity Z has 3 CGUs. Right? What are those 3 CGUs? A, B, and C with net fair values of 1200 lakhs, 800 lakhs, and 400 lakhs respectively. Right? So these are the 3 CGUs. M recognizes goodwill of 600 lakhs. Why? Because you can say when the purchase consideration was paid 3000, in that case, the amount, the net fair value was 2400. So how do you get 2400? So if you take the total of this net fair value of A, B, C, can you tell me what do you get? If you take the total of net fair value, can you tell me what do you get? Oh, so I can see this concern from Nupur. Nupur, sure. So please, once again, ping me towards the end of the session. I would request BUS team to revert to you on this. Okay. And please also share your email ID towards the end of the session. I'll request them. Huh? You'll get it. Don't worry. Okay. So now if you take the total, what do you get? 2400 lakhs. Okay. Now, against this 2400, 3000 is paid. So that's why you will say there is a goodwill of 600 lakhs, right? Now, at the end of X4, A makes significant losses. Its recoverable amount is estimated to be 1350 lakhs. Carrying amounts are detailed below. Okay. The recoverable amount is given to us and the carrying amounts are also given for 3 units. A, B, C. Okay. And we also have the carrying amount of goodwill. Right? Now let's talk about this impairment. See, we have understood that there is an impairment of 600. Okay. Now what do you do? For A, B, and C, we understand total net fair value is 2400 lakhs. So now what is the proportion of the fair value of A, B, and C? 50:33:70. That's the proportion. I'm talking about A, B, C only. Okay. Now, if you look at the net carrying amount of A, B, C, I'm not including goodwill. I'm excluding goodwill right now. It is 1300, 1200, and 800. Right? So what is the total you will get? 3300. Okay. Now what should you do? in this carrying amount, of A, B, and C, currently goodwill is not included. Why? Because goodwill is appearing separately. Yes or no? So what should you do? You should compare the carrying amount with the recoverable amount. That's our objective, to compare the carrying amount with recoverable amount. But as of now, when you compare the carrying amount of A, B, and C, goodwill is not included in that. So the standard says that allocate this goodwill amongst A, B, and C. Okay. And how will you do that? In proportion to the fair value of ABC. So if you do that, if let's suppose you allocate 120 to A, B, and C, in what ratio? 50 is to 33 is to 17. What do you get? Tell me, what do you get? If let's suppose if you allocate that, what do you get? 60, 40, and 20. Right? That's what you get. So now what will you compute? Now you will compute revised carrying amount of A, B, and C after including allocated amount of goodwill in that, which is 1360 for A, 1240 for B, 820 for C. Yes or no? Everyone clear so far? Tell me quickly. We are not yet through, but so far, are you clear on this? Everyone, please confirm. Clear?
Yes.
Yeah, everyone? Now, let's move further. Okay, now let's move. See, what have we achieved so far? We have been able to compute the revised carrying amount of all the CGUs after incorporating goodwill in those CGUs, right? If let's suppose you are able to allocate goodwill, so the standard says you will perform bottom-up test. Now, what does it mean? Now, what is the carrying amount of A? 1360 lakhs. And in the question, if we go back, it says at the end of X4, recoverable amount of A, I'm talking about only A, is 1350 lakhs. Correct? Now, as against this carrying amount of 1360, what do you have? A recoverable amount of 1350. So now, is this recoverable amount lower? Answer is yes. So in case it's lower, what does it indicate? There is an impairment loss. Now the question arises, where do you allocate this? See, the standard says, first of all, the impairment loss will be allocated to the goodwill component. Now, if you go back to A has two components in its carrying amount. 60 pertains to the goodwill and 1300 pertains to all the assets other than goodwill. Yeah. So the standard says if let's suppose any CGU has a impairment. So how do you allocate that? First of all, you will allocate the entire amount to goodwill. If the goodwill is not able to absorb, then you will pass it on to other assets in a proportionate manner. In this case, there is an impairment loss of 10. So will it be fully absorbed by goodwill? Tell me, will it be fully absorbed by goodwill? Yes or no? Will it be fully absorbed by goodwill? What do you think? Everyone? Yes. So that's why this entire amount will be allocated to goodwill. Clear on this? Right? So if in case you are able to allocate goodwill amongst CGUs, so you can perform the impairment testing for each CGU. Correct? Clear on this? Everyone clear? Anil says first priority goodwill. Yes. Everyone clear on this? Any questions, any doubts on that? Sridhar is clear. Simple one? Yeah?
Yes, sir.
Yes. Okay, now let's talk about situation B. Ratul is asking how to come pro rata. Means how do you compute pro rata? See, it's very simple. You have this ratio of 1200 is to 800 is to 400. So if you compute that, you will get this. Okay. Now let's talk about situation B. Now what do you have in this situation? See, in situation A, we assumed that you can allocate the goodwill amongst A, B, C. Let's suppose if that is possible. So what was the basis we considered? Their net fair value. Let's suppose if you cannot allocate goodwill on a reasonable and consistent basis. Now this information will be given to you in the question. In such a case, what do you do? Okay. Now we have the same fact pattern. Now we will try to compute goodwill. If let's suppose there is no reasonable way to allocate goodwill that arose on acquisition of Z to A, B and C. Okay. Further, you are given the information that at the end of X4, recoverable amount of Z is estimated to be 3400 lakhs. See, in situation A, recoverable amount of one of the unit was given. Now the recoverable amount of entire entity is given. Okay. Now, in this case, what do you do? In this case, standard says you will apply both the tests, bottom up, top down. Now, what does it mean? So let's understand. First of all, we will do the same thing. If you look at A, what is the carrying amount of A? Can you tell me what is the carrying amount of A?
1360.
1360. But 1360 you were getting when you allocated goodwill. Now we are not able to allocate goodwill. So tell me what will be the carrying amount of A?
So 1300, sir.
1300. Okay. Because we are not able to allocate goodwill. So you will take the carrying amount as 1300. Okay. Against this 1300, what is the recoverable amount? 1350. So if you look at the CGU individually, do you find any impairment? Answer is no. Answer is no. Why? Because the recoverable amount is higher. Okay. Now, when you compare that on an individual unit basis, that's what you call as bottom up. Now, what is top down? So let's understand what do you do in case of top down. So what you will do is you will put down the carrying amount of all the units, including goodwill. Okay, because now we are talking about entity as a whole. So that's why we'll not be only considering A, B, C. We'll also have to include goodwill, because only then you will talk about entity as a whole, right? So its carrying amount is 3420. Where do you get this? This information is given in the question. Do we have any impairment loss on any of the units individually? No, zero. So the carrying amount after bottom up test is 3420. And now, what is the recoverable amount for entity as a whole? Tell me, is that given in the question? Yes. So the question says at the end of X4, recoverable amount is 3400 lakhs for entity as a whole. For entity as a whole. So if you compare the recoverable amount with the carrying amount of entity as a whole, do you find any impairment? Tell me, do you find any impairment?
Yes, sir, 20.
Yes, so there is an impairment of 20. Now the question arises, where do you allocate that? Same way. Whenever there is any impairment, first of all, where do you take it? Goodwill. Now, what is the amount of goodwill? 120. So this 20 you will adjust with goodwill first of all. Okay. So that's why, where do you take this impairment loss of 20? It goes to goodwill. It goes to goodwill. Clear on this, everyone? Everyone clear? Any questions?
It means, sir, goodwill is the primary, means we preference to the goodwill no? When we calculating the impairment
Yes. Yes.
in a book.
See, whenever you have goodwill in the entity or goodwill pertaining to the CGU, and you have any impairment relating to that CGU, first of all, entire impairment loss will go to goodwill. Let's suppose in the given case, we have this impairment loss, let's suppose of 150. So what do? 120 will be allocated to goodwill. Remaining 30 you will take to other units. And this remaining, how do you allocate? That you will allocate proportionately.
Means pro rata basis, na, sir? Jo we calculate.
Yes, proportionately means pro rata only. Okay.
Yes, sir, clear.
Pawan is asking, suppose RICO amount 3000. What do you mean by RICO? Recoverable amount. So that's what I told you. If let's suppose, so you can compute the numbers. Okay. You can compute the numbers. Important part is that any impairment loss that you have, first of all, you will make goodwill zero with that. After that, once the goodwill becomes zero, what do? You will allocate it to other assets on a proportionate basis. But for goodwill, you will not apply the proportion. Goodwill, you will take out 100%. Okay. Any questions, any doubts so far? Everyone?
Sir, could you please tell me how this both of these methods impact financial statements of a specific company?
I can't understand your question. Your voice is breaking.
Like, I'm audible, sir.
You are audible, but your voice is breaking.
Just a second.
Yeah.
Sir, I'm audible now. The voice is clear.
Yeah, please pick up. Only then I'll get to know.
Sir, like how either of this method, while following, how this either of this method impact the financial statements of a company, like.
See, because you are creating a provision. If let's suppose you follow these methods, and if you create a provision, so where will the impact go? Impact will move to the financial statements. Yes or no? So when you do the accounting, where will the impact go? To the financial statements only. Okay.
Yeah, sir, but the impairment loss is different in either of these methods, right?
Yeah, but in both the methods, the impact will go to P&L only, which is a part of the
Can we
financial
opt
statements.
basing on favoritism, like
Sorry?
basing on management, basing on the favorability? Can the management switch basing on the favorability with either of these methods?
You're not clear. I couldn't understand. Basis what?
Like, like, can we switch any of these methods, or we only have to follow one method if it is followed earlier?
See, there is no preference for the entity to follow any method. It will be dependent on the facts and circumstances. Okay. If
Okay.
let's suppose goodwill can be allocated, so definitely you will follow the situation
Okay.
A. If that cannot be allocated, that's when you will move into situation B. You can't just straight away jump to situation B saying that A I do not prefer. Okay.
Okay, sir. Thank you, sir.
Sure. Anyone else? Anyone else?
It means we show in a balance sheet as per the previous student says ki, how do we
There is a
allocate.
lot of background noise. I can't understand.
Hello, I'm
Yes.
audible.
Yes.
In case, sir, in for example, is given as a from the Goldie. So in that case, he's saying ki that we allocate we showing the in a balance sheet, right, sir? It means we carrying amount we uh, go to the balance sheet. It means we impairment loss we asset side we showing no, sir, as a in
Yes, of course. So it's a kind of provision. So the way you show any provision, this will also be shown. So this provision will reduce the value of the asset.
in case it is excess. It means we compare with the recoverable amount with the carrying
Yes,
amount. So
right.
in that case, if it goodwill amount is showing which you are giving example as a 150, for example 150. So in that case, in balance sheet, what will we do, sir? In means carrying amount we showing whichever.
So if let's suppose impairment loss is 150, okay. So your goodwill will become 0.
Yes, sir.
Remaining 30 you will allocate to the remaining assets. Means A, B, and C on a proportionate basis.
Okay, sir. Understood.
Okay,
Yes, sir. Clear.
sure. Anyone else? Any more questions on this? Yes, quickly. Anyone? Any questions? So now, see, similar to what we just discussed in terms of allocation of goodwill amongst CGUs, there is also a part of the entity which is called as corporate assets, or you can say corporate office or head office. Now, if you look at an entity, let's suppose entity has 3 units: P1, P2, P3. And let's suppose they have a corporate office. Now, do you think corporate office is able to generate its independent cash flows? Answer is no. Corporate office is what? It's a cost center. It does not generate cash flows. Yes or no? But when you talk about corporate office, so definitely you can say we are having some assets there. So that's why when you compute this impairment, so what should you do? You should allocate this corporate office amongst these units. So let's suppose carrying amount of unit P1, P2, P3 is say 50 each or 100 each, or let's suppose different carrying amounts are there. So amount of the corporate office should also be allocated to P1, P2, P3. Again on a proportionate basis. So if you allocate that, what do you get? Revised carrying amount of P1, P2, P3. Now those revised carrying amount of P1, P2, P3 should be compared with the recoverable amount of P1, P2, P3. So this is exactly similar to the calculation we just did for goodwill. Okay. Now, here again, you have this similar sort of methodology, but the important point is that whenever you have corporate office, you will be required to carry out that exercise of allocating the corporate office assets amongst those units in a similar manner. If you can't do that, if let's suppose you can't allocate that, what do? There again, you will follow the bottom-up approach. If not possible, then you look at the company as a whole for calculating impairment. Okay, now let's look at this small example. A machine has suffered physical damage, but it's still working, although not as well as it used to be. Net selling price of the machine is less than its carrying amount. Machine does not generate independent cash inflows from the continuing use. Smallest identifiable group of assets that includes the machine and generates the cash inflows from continuing use that are largely independent of the cash flows from other assets is the production line to which the machine belongs. Means you are talking about the CGU right now. Okay, this production line is what? It's a CGU. The recoverable amount of the production line shows that production line taken as a whole is not impaired. Okay, now in this case, what do? Assumption 1. Budgets or the forecasts which are approved by the management reflect no commitment of management to replace the machine. Now, the recoverable amount of the machine alone cannot be estimated since the machine's value in use may differ from its net selling price and can be determined only for the CGU to which the machine belongs. What is that? Production line. And if you look at the production line, that is not impaired. So what will happen? No impairment loss will be recognized on the machine, because when you compare it at a CGU level, you don't get impairment. So will you be able to record impairment? Answer no. Nevertheless, the entity may need to reassess the depreciation period or depreciation method for the machine. Okay. So when you don't get into the impairment testing, so the standard says various other factors around the machine, means its useful life, its depreciation method should be looked at, should be reviewed. Okay. Another assumption. What is that? Let's suppose budgets or forecasts have been approved by the management which reflect a commitment of management to replace the machine and sell it in the near future. When you talk about cash flows from the continuing use of the machine until its disposal, so that is expected to be negligible. In this case, if you talk about value in use of the machine, that can be estimated as close to its net selling price. Yes or no? Because you are considering that to be negligible. Net selling price is also negligible. In this case, because you have the value in use as well as fair value less cost to sell of the machine, so you can compare its recoverable amount at an individual level to its carrying amount also, right? So therefore, you will be able to recognize impairment loss pertaining to the machine. Okay, so it's on a similar thought that if, let's suppose, you have a machine, what is the problem that we spoke about? That generally you are not able to identify the independent cash flows pertaining to that asset, and that's why you get onto the CGU level. But if in case you are able to compute that for that individual asset, you don't need to go to the CGU level. You can do it at asset level only. Correct? Next, reversal of impairment loss. Now let's talk about this reversal of impairment loss. Now this is an important consideration. All this while, what we have discussed is how do you recognize an impairment loss? Let's take an example for this. Say there is a machine. It has a carrying amount of 100, recoverable amount of 80. So in this case, do we have any impairment? Tell me. Do we have any impairment in this case?
Yes, sir, 20.
20. Very good. So now, let's suppose year 1. You have this information. So what will you do? You will recognize an impairment loss of 20. Okay. Now, what may happen is this machine continues to stay with the business. Let's suppose next year. This recoverable amount has increased. Say this has become 150. Possible? Tell me, possible? Is it possible or not?
Sir,
Can
since
sorry?
year on year reduced, so therefore
Sorry?
it is maybe not possible.
Why
to
not
one
possible? Why is this not possible?
due to the machinery nature of machine, which is the year on year is reducing the value and
No, that's incorrect. See, when you talk about recoverable amount, we are not talking about carrying amount. So in case of carrying amount, you will say I'll charge depreciation. No, I'm not talking about carrying amount. I am talking about recoverable amount. What is recoverable amount?
it
It's
means, sir,
fair value in a way. Okay, or the cash flows you will generate. So that can always go up. That can always increase.
okay.
Now in this case, if let's suppose its a recoverable amount has increased next year, and if you look at the carrying amount, so earlier when you created this provision for impairment, what was the reason? The recoverable amount was lower. Yes or no? Now when the recoverable amount has increased, what should you do? This impairment
Sir, will simply nullify.
recognized that you need to now reverse. So therefore, what will you do? You will reverse the impairment loss which was recognized in the previous year. Okay.
Previous year.
So we
Yes.
have this reversal of impairment loss. Okay. So every time when you look at the recoverable amount, now please remember, reversal will be restricted to the impairment loss you would have recognized in the previous year. So in this example, recoverable amount has increased significantly. So can you increase the value of the asset beyond its carrying amount? Answer is no. Because we are not talking about fair valuation. We are not talking about revaluation. We are only talking about provision which was created and now the reversal of the provision. Understood? Understood? Everyone clear on this? Simple one? Okay, now another point. If let's suppose you look at this example, so I'm talking about this example only. In this example, can you tell me what is the amount by which you will reverse the impairment? Everyone, what is the amount by which you will reverse the impairment? Quickly. Then Lakshmi, Gayatri, they are saying 20. Surendra says 20. Pavan says 20. Gaurav says 20. Very good. So I think everyone is saying 20. Correct? Now there's a small catch over here. Please try to understand that carefully. Let's assume no impairment was done on this machine. If no impairment would have been done, let's suppose recoverable amount would have been higher and no impairment would have been done. If no impairment would have been done, and let's suppose you would have charged depreciation. Let's suppose each year 10 was the depreciation. Then at the end of year 2, what would have been the carrying amount? Tell me. At the end of year 2, what would have been the carrying amount?
90.
90, correct? Gaurav, Anil, and I think Virashri, Surender, they are saying 90. So now let's try to understand this. See, if there was no impairment, then the carrying amount would have been 90. Right. But now, if you look at the situation, okay, now if you go back to this situation, now because the entity created an impairment and there's a reversal of impairment, where are you taking this carrying amount to? Where are you taking the carrying amount? You are bringing it back to 100? Yes or no? With the reversal, what are you doing? You are bringing the carrying amount to 100? Tell me yes or no?
Yes, sir, yes.
Will it be appropriate? Standard says no. Standard says if let's suppose you are reversing the impairment, the maximum amount up to which you can reverse the impairment cannot exceed this carrying amount, which would have been there had no impairment been charged by the entity. So that's why, what should you do? That's why this reversal you will have to restrict to 10. Why? Because if you reverse the impairment by 10, you reach a number of 90. Means the maximum amount should be capped to the carrying amount, which would have been there post depreciation and without impairment. Everyone clear on this? This is a very important point. Without the example, you will not be able to understand this. Virashri is clear.
Sir, could you please explain the reason behind keeping that restriction, if you don't
Keeping
mind?
behind that restriction is very simple, that we are not looking at revaluation. You should not increase the value of the asset. What was the objective? Objective is to create a provision. Okay. And if let's suppose provision is not
Yes,
there,
sir.
that move on
Okay.
with the carrying amount, right? Anyone else?
Yes, sir.
Anyone
Okay.
else? Anyone else? Quickly, any questions? Any
It means that
questions?
depreciation which you told in this case, the 10 rupees of 10 per year on year. So in that case, we capped with the limit as a 10 rupees as a depreciation, which is post depreciation in such a
Correct.
case. So
Correct. So you
therefore,
can say post depreciation carrying amount you will compute,
therefore we
assuming no impairment was charged,
okay.
and that's the number to which you will restrict post reversal of impairment. So that's what you'll have to do.
Therefore, we taking 10 as a impairment losses reverse.
Yes.
Okay.
Because if
It
you
is
reverse the impairment by 10, where do you reach? 90.
90.
Because let's suppose if you look at year 1, when you created the impairment, what will be the revised carrying amount? Your revised carrying amount will become 80. Yes or no? And now to this 80, what will you add? You will add 10. So where do you reach? 90. Clear?
Yes, sir. Yes, clear.
Yeah, because if you reverse by 20, then you reach 100. 100 means you are increasing the value of the asset, which would have been there had no impairment been charged, which is wrong. Okay.
Okay, sir. Clear.
Okay. Now, sorry.
Sir, that means that impairment loss will be there in the balance sheet liability side, sir.
No, that is not an impairment loss. You can say that is sort of adjusted. So it's gone. It's adjusted.
So where it will be reflected, where it will be showing, sir, the 20 rupees before
No,
adjustment?
so when you create an impairment loss, where do you show that? P&L
Profit.
only. So
Yes.
P&L is done and dusted each year.
Yes.
Do you carry the P&L? Answer is no. Okay. Now, let's suppose you have one more situation. Say there was a CGU. In this CGU, you have goodwill and other assets, right? Now the carrying amount of goodwill was 100, other assets was say 900. Okay. And there was an impairment loss. Let's suppose that was 80. So this entire impairment loss would have been allocated to goodwill. Yes or no? This entire impairment loss would have been allocated to goodwill. Correct? Yeah, everyone with me?
Yes, sir. In proportion of CGU.
But it's not in proportion to CGU because we are only talking about one CGU. So
Okay.
that means the carrying amount of goodwill would now be appearing as, tell me, what would be the amount of goodwill post impairment? 20. Very good. Then Lakshmi says
20, sir. 20.
it should be 20. Now let's suppose next year or maybe after 2 years, after 3 years, recoverable amount has gone up. Now if the recoverable amount increases, what do? You will consider reversing the impairment loss. But here the standard says any impairment loss which is charged to goodwill will never be reversed. Okay. This will never be reversed. See, if you charge any impairment loss to these other assets, This can be reversed. Under what situation? Under the situation that we just discussed. Okay, this one. But any impairment loss that you charge to goodwill, you can't reverse. Clear? So something which is gone to goodwill is permanent. Okay. Now, let's move further. So I think we talked about this impairment loss. So now what we will do is we'll move on to some questions, right? And with the help of these questions, we should get some more clarity as around some of these concepts. Okay. See, because we have discussed these concepts, some of these examples, so that's why I would appreciate if you can just try to attempt all of these questions on your own first before I move to the solution, right? Because that will help you in getting the conceptual clarity as well. Because if you do the questions yourself, even if you make mistakes, that's okay. But it's important that you attempt on your own and without looking at the solution. Okay, so let's look at this first one. Argo Industries Limited gives the following estimates of cash flows relating to PPE. Now, what is the date? It is 31st December X1, right? The discount rate given in the question is 15%. So we are given some cash flows for X2, X3, X4, X5, X6. Okay, so all of these cash flows are given to us. Residual value at the end of X6 is given to us. PP was purchased on 1st January XX at 40,000 lakhs. Okay. Now, useful life is 8 years. Net selling price on 31st December X1. When this information is also given to you, that is 20,000 lakhs. You are required to calculate carrying amount of PPE, value in use, recoverable amount, impairment loss, if any. Revised carrying amount means if let's suppose there is an impairment loss, what is the revised carrying amount? If the impairment loss is 0, then of course the carrying amount you will compute in A will also be similar to E. Okay. And then you are also required to compute the depreciation charge for X2, means next year. Now please remember you have calendar year here. Okay. The year XX is immediate preceding year before the year X0. Right? So you are given this information about X1 and some of this information that you have is for X1. So year XX, so that they are saying is immediate preceding year before X0. Okay. Now why is this relevant? Because the PP was purchased on 1st January XX. So that's why it's important for you to consider the dates. Right? Now, over to you. So I'll just wait for 2 to 3 minutes for you to solve this. And you can just start sharing your answers for all of these questions A, B, C, D, E, F. And then I'll get on to the solution. Okay, over to you. Yes, quickly. So once you're through, you may share your answers. Okay, great. I can see this point number A. Akila has computed. Okay, so she is getting 14,625 as the carrying amount. Okay, very good. What about others? Everyone, I'm just hoping you are onto this. Okay, so while answering, it's important that you specify which one you are answering. A, B, C, D. Sridhar is also through, so he has got this carrying amount. Okay, so Sridhar is getting 25,375. So significantly different. So I think two answers are quite different. All right. What about others? Okay, so Gayatri has also got the same answer as Sridhar. Good. Pawan is also getting the same answer as Sridhar. All right. What about others? And what about the remaining points? Quickly, huh? So I'll just wait for a minute and then I'll get on to the answer. Huh? Okay. You need to solve this fast, please. As quickly, what about remaining points? Value in use, recoverable amount, impairment loss. Who has computed this? Quickly. Very good. Sridhar has computed the value in use. Great. 19,025. Kambira has computed carrying amount. Okay. Pawan has also computed the value in use. It's 19,020. Okay, good. What about others? Quickly. Sridhar has got the recoverable amount as 20,000. All right, so I think I'll move on to the solution now. Okay, great. Pawan has also computed the recoverable amount. Great. All right, so let's quickly look at the information which is given. So on 1st January XX, PP was purchased, right? What is the useful life? 8 years. So that means the amount of depreciation, you know. Now, the only thing is, for how many years you'll charge the depreciation? Up to 31st December X1. So XX is the first year, X0 is the second year, and X1 is the third year. Correct? It's quite straightforward. So now, how do you calculate depreciation? Carrying amount less residual value divided by useful life. For how many years? For 3 years. So what is the depreciation? 14,625. So therefore, what is the carrying amount? 25,375. Yeah, so it's quite a simple calculation. No complication as such. Then, what is the next point? Next point is about calculation of value in use. Now, when you calculate this value in use, what does it mean? Present value of cash flows. Are we given the cash flows? Yes. Do we also have the discount rate? Yes. Okay. Now, all of these cash flows that we have, using the discount rate, we need to compute the present value only. Yes or no? See, for your purposes, every time this entire data is available to you, so what do you need? You will only need the arithmetical calculation largely. So now what is the value in use you are getting? 19,025. Yeah, again, quite straightforward. Now what is recoverable amount? It is higher of value in use and net selling price. Is that given in the question? Yes. So what is higher of these two? 20,000 lakhs. Correct. Now, what is impairment loss? Now you will compare the carrying amount with recoverable amount. Recoverable amount is clearly lower than the carrying amount. So that's why, what is the impairment loss? 5,375 lakhs. So what will be the revised carrying amount? Reduce this impairment loss from the carrying amount. Now, what is your revised carrying amount? 20,000 lakhs. How many years are left in terms of the useful life? 5 years. So that's why, how do you calculate depreciation? You will apply the prospective approach. Okay, any change, how do you make? Prospectively. So what is the revised depreciation charge? 3,800 lakhs each year. Clear? Everyone clear on this? Yeah? Any questions on this? I think most of you are able to solve this. Ratul is clear. Any questions on this? No? Sure? All right, great. Akila, Sridhar, they are also clear. Let's move on to the next one. Yes.
How the depreciation is 3 years.
I can't hear you. Somebody is trying to speak.
Yes, sir. Can you hear me?
I can't hear you. Can you speak a bit louder?
So now I am clear.
Yes, you're clear now.
Yes, sir. So depreciation for 3 years, you say that 3 years is where it is given, sir.
See, your voice is not clear. Are you there? Are you there? Okay, Gayatri is asking. Okay, no, Gayatri is saying she's asking why depreciation is given for 3 years. See, that is for 3 years because you acquired PP on which date? 1st January XX, right? What is the reporting year we have? 31st December X1. Okay. So how many years we will consider? So today we are on 31st December X1. Prior to this, you will have 31st December X0. And the question says year prior to 31st December X0 is 31st December 2000 XX. When is the PP acquired? 1st January 2000 XX. Okay, so how many years do we have? First year, second year, third year. Okay, first, second, third. So for how many years you will calculate the depreciation? 3 years. In fact, the question has clarified this. So if you look at the question, I would say most of the answers are given in the question itself. Yes or no? Yeah. I'm just hoping, Mathli, you're clear. I think this was your question. You're clear on this? Then Lakshmi is asking, the residual value is same for all the years? Of course, because we are given this residual value as a single amount. Okay, and residual value is not year wise. So when you charge the depreciation, at the beginning you calculate what is going to be the residual value. Okay, so if at all there is any change, so the question will tell you that after 1 year there's a change, after 2 years there's a change. Otherwise, residual value will consider same only. Yeah. Then Lakshmi, clear? Anyone else? Any more questions on this? No? Sure? Okay. So let's move on to the next one. X Limited is having a plant, an asset, carrying amount of which is 100 lakhs on 31st March X1. Okay, so now we have this financial year. Its balance useful life is 5 years. Residual value at the end of 5 years is 5 lakhs. And the estimated future cash flows from using the plant in the next 5 years are given to you. So in this case, you are required to compute two things: value in use and a recoverable amount. That's it. Okay. Yeah. Over to you quickly. Now, quickly. Now, this one you need to calculate fast, please. So once again, I'll wait for 2 to 3 minutes for you to solve.
Hello, sir. Value in use is a 121.92.
Okay, very good. And what about recoverable amount? One has computed this. Sridhar is getting 121.92 as recoverable amount. Akila is also saying recoverable amount is 121.92. What about others? Quickly.
Sir, 121.92 is the recoverable amount because value in use as compared to the net selling price is greater than. So therefore,
Yes,
we taken.
correct. So in this question, of course, we'll move on to the calculation also. Once you calculate the value in use, I don't think you need to take time to compute the recoverable amount, isn't it? Because what do? You will compare this with net selling price. Is that given in the question? Answer is yes. That is given in the question. Okay. So effectively in this question, what is it you are required to compute? Simply the value in use. Okay. And for calculating value in use, are you given this entire information including the discount rate? Answer is yes. Answer is yes, right? So this is 121.92. Now, once you have that, you understand this is higher than net selling price. So that's why, what is your recoverable amount? Same amount only. Clear? Next. So let's look at the next question. Gaurav is asking, रेजिडुअल वैल्यू को प्रेजेंट वैल्यू पर क्यों किया? Gaurav, tell me the same thing we did in illustration 1 also, isn't it? So why do you think it was okay in question 1 and why do you have a confusion in question number 2? I'm a bit surprised on this. So in question number 1, you were okay with this. In question number 2, now clear? Yeah? Okay, great. Anyone else? Any questions so far?
Hello, sir.
Yes.
In case, sir, here is given as a residual value, right, sir?
I can't understand your question. What do you mean by this?
In this illustration 2 is given as a residual value. We
Uh-huh.
take it for the calculation of PV of a future cash flows year on year. So therefore, if we taken as a, it is given as, for example, suppose it's given as a unguaranteed and the guaranteed residual value. So therefore, we also taking as a treatment as per the AS, which we learned
No, so
previously.
I think you are mixing up two things. Where do you have this guaranteed and unguaranteed? So that is in respect of leases. In this case, you will not bring in that concept. Okay. So don't mix up two things. Huh? Otherwise,
Okay.
that will create a confusion to you.
Okay. It
Right.
means respectively applicable the standards. No? It means you only lease for the we use guaranteed
See,
and
you have these things around the guaranteed or unguaranteed when the question will ask you about leases. Because therein you have two parties, lesser, lessee, who are discussing this, what is guaranteed, what is unguaranteed. In this case, you don't need to get into that segregation. Okay.
okay, sir.
then I can see this calculation from Ratul. Okay, very good. So Ratul has shared the calculation. Great. Okay, so let's move on to the next one. Question number 3. G Limited acquired a machine on 1st April X0 for 7 crore that had estimated useful life of 7 years. Machine is depreciated on SLM basis and does not carry any residual value. What does it mean? Residual value is nil. On 1st April X4, carrying value of the machine was reassessed at 5.1 crore. And the surplus arising out of revaluation was taken to revaluation reserve. Okay. For the year ended March X6, means 31st March X6, conditions indicating an impairment of the machine existed and the amount recoverable ascertained to be only 79 lakhs. You are required to calculate the loss on impairment of the machine and show how this loss will be treated in the books of G Limited. G Limited had followed the policy of writing down revaluation surplus, which is revaluation reserve, by increased charge of depreciation resulting from revaluation. Okay. Now, in this case, let's look at the calculation year on year. Okay. So what I'll do is I'll just take you to the working file first of all. So there is a discussion around revaluation. So that's why I will first of all solve this, and subsequently in some of the other questions, you may solve this. But if you want to attempt this on your own, that is again okay. Huh? Now, in this case, what do you have? See, I would request you to please open the study material. Otherwise, I'm not sure if you are able to access this now. Otherwise, I'll just repeat the fact pattern on the screen only. Okay. So the machine was acquired on 1st April X0 for 7 crore. Now this is 1st April X0. 7 crore was the value, 7 years was the life. Right. So what will be the amount of depreciation? Can you tell me? What will be the amount of depreciation each year? Tell me quickly. Pawan says 1 crore. Now, we are told 1st April X1. Sorry, 1st April X4. So that means how many years?
5 years, sir.
Why 5 years? Let's look at this. 31st March X1, 31st March X2, 31st March X3, 31st March X4. So how many years do we have? Tell me how many years?
4 years, sir.
4 years. So this is the mistake we generally make in the exam. In this case, we do not have calendar year. Okay, so in the exam, please try to calculate this. Generally, you don't do that. You assume. Okay, because please understand, if you start with the depreciation for 5 years, your entire solution will go wrong. despite knowing the concept. Okay. So for 4 years, what is going to be the depreciation charge? 4 crore, right? So as on 31st March X4, or you can say as on 1st April X4, what should be the carrying amount? Can you tell me what will be the carrying amount? Tell me what will be the carrying amount?
3 crore.
It has to be 3 crore, right? So your carrying amount is 3 crore. So I am also just flipping to the question in between. Now the question says, on 1st April X4, carrying amount was reassessed at 5.10 crore. Why? Because they have done the revaluation. They have done the revaluation. So that means they have increased the value of the asset. Yes or no? They have increased the value of the asset, right? So now, if you look at the revised carrying amount, that is 5.10. So that means they have increased the value by 2.10 crore. And where will you take this 2.10? Can you tell me? Revaluation reserve. So this amount will go to revaluation reserve, 2.10, right? Now, if you look at this question, so far we have not applied AS 28. Can you tell me which accounting standard we have applied so far?
Yes, 10, sir.
AS 10. Very good. So every time in a question, what may happen is you may have to apply different accounting standards. Okay. So far, please remember we have not applied anything related to AS 28, right? It's all about AS 10. Okay. So now as on 1st April X4, we have computed the amount. Now let's understand what does the question say. It says for the year ended 31st March X6. So that means we need to move to 31st March X6, right? So how do we do that? From 1st April X4, we will now have to reach 31st March X6. So that means we'll have to charge the depreciation for 2 years. Okay. So now what do we do? 31st March X5, 31st March X6. So what will be the depreciation you will charge? Your revised carrying amount is 5.10. How many years are left? How many years are left?
2 years.
3 years. Why 2? What was the total useful life?
7 years.
7, out of which you have charged for 4. So how can you say 2 years are left? Let's be very careful. That's why I'm putting down everything on the chart. And in the exam, the same approach you can also follow. All of this can be a part of your rough working notes. Okay. So how many years are left? 3. Okay. So your remaining useful life is what? 3 years. And for how many years you will charge the depreciation? For how many years you will charge the depreciation?
2
To
years,
reach
sir.
up 2 years.
2 years.
So for 2 years, you charge the depreciation. So can you tell me what is the amount you will get? What is the amount you will get?
3.4.
3.40. So 3.40 is the depreciation. So if you do that, what is the carrying amount you will have on 31st March X6. Carrying amount on 31st March X6 after the charging this depreciation. Can you tell me what is that amount?
1.7.
1.70.
1.70. Very good. So you can just see this now. It's all about calculations. And please remember, so far we have not applied anything related to impairment. Yes or no? It's all about PPE calculation, which is a very simple thing, correct? Now what do you have? Now, on 31st March X6, question says, conditions indicating an impairment of the machine existed and the recoverable amount was 79 lakhs. Okay. So if let's suppose against this carrying amount, you have a recoverable amount. See, the good part is the question is giving you the recoverable amount. So do we have any impairment? So do we have any impairment now? Tell me. Do we have any impairment?
Yes, sir.
Yes. What is the amount of impairment? Can you tell me?
0.91.
0.91. Very good. So now, what is the amount of impairment loss you will have? That is 0.91. Right? So it's a simple calculation so far. Any questions, any doubts so far? Tell me. So there is one more step I need to discuss with you. But any questions, any doubts if you have so far, please ask me. Then I'll move on to the next step.
Hello, sir.
Yes.
Sir, I asking about the, for example, in case in exam form, it is in examination. Can this type of question can be raised for example, question asking about the impairment loss calculation. So therefore, also given the AS10 reference, for example, we starting this in illustration 3, starting with the AS10, right, sir, till the indication of the losses calculation.
Uh-huh.
Loss. So can in exam this come as questions like 2, 3 AS accounting standards are given as an example. Then last is taken the which are the main question means which means in this question is AS10 first. Then we calculate the AS28, right? So can examination in exam can in paper comes the like this type of questions.
Of course, see, anything which is given in your study material, you will always expect that to be in the exam. Okay. So that's why we are practicing these questions, and this is what you should also expect. Right?
Right, sir.
Right. Okay. So anything that you have in the study material, you can say that's the basis. So this is how the questions are going to be there in the exam. So you should not be thinking that if let's suppose you have a type of question in the study material, that is something you will not find in the exam. Study material is your basis. And in fact, in most of the cases, you have questions from the study material only. Okay, so if you go look at the past year's papers, if you look at the RTP, some of these practice questions, so all of these will form the basis. Right? Clear?
Yes, sir.
All right. So now in this case, let's try to understand. See, every time you have an impairment loss, we discussed one point. What was that? That the impairment loss you will charge to P&L. Right? But in this case, there's a small catch. What is that? See, the standard says, now let me just take you back up. Okay, now impairment loss is 0.91. Now, what was the balance in revaluation reserve on 31st March X4? 2.10 crore, correct? So this is the revaluation surplus you have created or revaluation reserve, right? So when you charge the depreciation, so if you read the question carefully, G Limited had followed the policy of writing down the revaluation surplus by increased charge of depreciation resulting from revaluation. Okay, so this is the policy they had followed. Okay, means any increase which they are getting. So what is the increase they were getting? 2.10? 2.10?
Yes,
Okay.
sir.
Now, enhanced depreciation which is met from revaluation reserve. What is that? For 2 years. For 2 years, what is that? Can you tell me quickly? It is 1.40. So you can just compute it on a proportionate basis also. So this 2.1 divided by 3 into 2. What do you get? 1.4 crore? Yes or no?
Yes, sir.
So this is the enhanced depreciation which has been adjusted through reserves. So you can say that depreciation is adjusted against two things. Now, if you look at the depreciation amount, now what is the amount of depreciation that you have charged for 2 years? It's 3.4, right? Out of this 3.4, 1.4 has been adjusted against revaluation reserve. And the remaining has been adjusted against P&L. Okay. So if you adjust it against the revaluation reserve, what will happen? Your revaluation reserve would have gone down. That would have gone down. So what will be the balance of revaluation reserve now?
0.7.
Sorry?
0.7.
0.7, correct?
0.21. 0.2.
0.2. I can't understand this. Your revaluation reserve was 2.1, against which you adjusted 1.4. So what are you left with? Let me just go back to that.
So
working
0.7.
Let me just go back to the working file. I think you are getting confused. So let me just go back to this. Okay. Over here, we'll look at this. Now, please look at these numbers carefully. What was the amount of revaluation reserve? 2.1. What was the total depreciation for 2 years? 3.4. Okay. We are saying that out of this depreciation of 3.4, depreciation amounting to how much? 1.4 has been adjusted against revaluation reserve, and depreciation amounting to 2 crore has been adjusted against P&L. So if let's suppose you have adjusted the depreciation of 1.4 against revaluation reserve over the period of 2 years. Okay. So as on 31st March X6, what will be the balance in revaluation reserve? Can you tell me? As on 31st March X6, what will be the balance in revaluation reserve? Tell me quickly. Quickly, huh?
0.7.
2.10 minus
Sir, 0.7.
1.40,
0.7.
which means 0.70.
Yes,
Correct?
sir.
Okay. Now what is the additional point we need to discuss that we have not discussed so far? All this while we were saying that if you have any impairment loss, that should go to P&L. Okay. But if let's suppose you are computing the impairment loss on revalued assets. Now please listen to this very carefully. If you are computing the impairment loss on revalued assets, so are we doing that in the given question? Yes. So this impairment loss that you have computed is on revalued assets. So this impact will first of all go to revaluation reserve. So what's the total impact? 0.91. 0.91. So where will you take this? You will take it to revaluation reserve. But do we have the revaluation reserve equivalent to 0.91? Answer is no. So that's why what do? The balance impact you will take to P&L 0.21. So this impairment loss will be adjusted against two things. 0.70 revaluation reserve and balance against P&L. Everyone clear? See, in this question, if you ask me, all this while, everything was all about PPE and very simple. In fact, the recoverable amount was also not required to be computed. Question has solved this for you. The only thing that you are required to adjust is what? This impairment loss against two things, P&L and revaluation reserve. Everyone clear? Yeah, everyone clear?
Yes, sir.
Okay, very good. Any questions, any doubts on this? Because I think we have sort of stretched this. Otherwise, we'll take a quick break. Huh?
Sir, for the reason age 29, 28 is prescribing us to first reduce the impairment loss to the extent of a revaluation reserve proportionate to the revaluation reserve, and the rest of impairment loss to be posted in P&L.
Yes, that's correct.
Okay, sir.
Anyone else?
Thank you.
Quickly. No? So let's
Sir,
take a... Yes.
sir, I understood the entire thing, sir, but this enhancement depreciation, sir, can you explain it, sir, again?
Enhancement depreciation is nothing. See, when you revalued the asset, so what was the carrying amount? Let's suppose X. When you revalue, it becomes X plus 1. Yes or no?
Yes, sir.
So if let's suppose you were to charge depreciation on X, it will be higher when you are charging the depreciation on X plus 1. Yes or no? Yes or no?
Yes, sir.
So that is what you call as enhanced depreciation. So why are you getting enhanced depreciation? Because you have increased the value of the asset by revaluing that. Clear?
Okay, sir.
Sure. So let's take a quick break and then we'll continue. Huh? Okay. So IT, we can take a break now. X Limited purchased a PPE 4 years ago for 150 lakhs and depreciates it at 10% per annum on the SLM basis. Okay. At the end of 4th year, it has revalued the asset at 75 lakhs and written off the loss on revaluation to P&L. Okay, so seems there's a revaluation loss. However, on the date of revaluation, the market price is 67.5 lakhs and the expected disposal costs are 3 lakhs. What will be the treatment in respect of impairment loss on the basis that fair value for revaluation purpose is determined by market value and value in use is estimated at 60 lakhs? Over to you, quickly. Yes, quickly. So once again, I'll wait for maybe 2 to 3 minutes for you to solve this and share the answer. Huh? Yes. So try to compute this and tell me the answer that you get. Okay. Yes, anyone who is through, start sharing the answer. So I'll move to the solution once you are through, right?
Hello, sir.
Yes. So I
Sir,
can
in
see response
illustration,
from Gayatri. Gayatri is getting an impairment loss of 10.5. Okay. Sridhar is getting depreciation of 60. So give me the complete answer. I think somebody wants to speak. Yes.
should be revaluation statement of P&L immediately since there was downward revaluation of asset which was already charged to P&L. Okay, it means we already the date of revaluation
See, if you want to speak, please speak. Otherwise, please stay on mute. What about others? Are you through with this? So let's take one more minute and then I'll get on to the solution. Huh? Right? Quickly. Okay, anyone else? Anyone else? No? Sure? So let's look at the answer. Huh? I think Sridhar has also shared this number, but what is this for? Okay, so let's look at this. Now, in this case, so what do we have? See, if the recoverable amount is less than the carrying amount, so the carrying amount should be reduced to the recoverable amount. So that's the concept. In this case, what do we have? Net selling price is what? 64.5. Why? Because the question says market price is 67.5 and the expected disposal cost are 3. So the net selling price is what? 64.5. Okay. Value in use also given. Value in use is 60 lakhs. So what is the recoverable amount? Higher of these two? Correct. So what is the recoverable amount? 64.5 lakhs. Right. Now, how do you calculate impairment loss? So you'll have to compute the carrying amount. Yes or no? Right. Now, let's get on to the calculation of the carrying amount, because I think that's what we are required to check now. So this asset was purchased at 150 lakhs, right? And depreciation was 10% per annum. The important point is for how many years you will charge the depreciation. So it says at the end of 4th year. At the end of 4th year, this revaluation has been done. Or we are looking at this entire information at the end of 4th year. So that means for how many years you will charge the depreciation? 4 years. So at the end of 4th year, what is the carrying amount? 90 lakhs. Now this is the time when the revaluation is done. And through the revaluation, you are not increasing the value, you are decreasing the value. So if you decrease, where does the impact go? P&L, right? So the revised carrying amount after revaluation happens to be 75 lakhs. Okay. Now, this 75 lakhs, what do you do? This is the revised carrying amount. Okay. And what is the recoverable amount? 64.5. So is the recoverable amount lower than the carrying amount? Answer is yes. So that's why we have an impairment loss. And what is that? Carrying amount less recoverable amount. So what is that? 10.5 lakhs. Okay. Everyone clear on this? 10.5 lakhs is the impairment loss. Everyone clear?
Yes, sir.
Any
Clear.
questions? Anyone? Any questions on this? Any questions? Akila is clear. So I think this was quite simple, straightforward. The only thing is you were required to get into this revised carrying amount. See, that's where the confusion may arise. Correct? Okay, so let's move further. So now what we will do is we'll just look at some more questions to practice.
Sir,
Yes.
like in case of a downward revaluation, like we can directly take entire impairment loss to P&L. I agree, like I'm
No, it's
okay
not
with that.
about
Sir,
entire impairment loss. So when you do the revaluation, so you will apply AS10. You will not apply AS28. Understood?
yeah, sir, like got it. Like in case of upward revaluation,
So once
we
again,
are like
when you are talking about upward or downward, you are not talking about impairment. Please understand. You are talking about
yeah,
revaluation.
sir, like we are applying AS 10 and we are revaluing the asset, right?
Yes.
Sir, like when and at the year end, like when we are comparing carrying amount and recoverable amount for to identify the impairment loss. Like we are like applying the contradict. Like it is quite contradictory, right? We are like erasing the reserve which was created as per AS 10.
So why is it contradictory? I can't understand.
Like we are reducing the reserve which we created according to AS 10. Like
What is
it
the problem?
not?
What is the problem? So if let's suppose you have created a reserve and through impairment you are required to reduce the reserve, what is the problem? So why do you want to carry the reserve?
So then the
So I
main
think you are
purpose of
discussing
AS
about
10 is
question number
getting.
3. It's not about question number 4, is it?
Yes, sir.
So what is the problem if let's suppose you reduce the value of reserve? What is the concern? I can't understand your concern.
So then like AS 10.
So does AS10 stop you from reducing the value of the reserve? Is there anything in AS10?
No, sir.
No. See, actually, what do? At times you pick up unnecessary thing, which is sort of creating a confusion for yourself. That's why I keep saying anything which is there in the accounting standard, you should restrict to that. Just try not to go beyond that. If there is nothing in the accounting standard, why you're thinking about it? Why are you creating a confusion for yourself unnecessarily? Isn't it? Yeah. So that's why please try to focus on what is there in the accounting standard. Try not to go beyond that. Okay.
Okay, sir. Okay.
Sure. So
Thank you,
let's
sir.
look at the next one. A publisher owns 150 magazine titles, of which 70 were purchased and 80 were self-created. Price paid for a purchased magazine title is recognized as intangible asset. Cost of creating magazine titles and maintaining the existing titles are recognized as expense when those costs are incurred. Cash inflows from direct sales, advertisement are identifiable for each magazine title. Titles are managed by customer segments. The level of advertisement income for a magazine title depends on the range of titles in the customer segment to which the magazine title relates. Management has a policy. What is the policy? To abandon old titles before the end of their economic lives and replace them immediately with new titles for the same customer segment. In this case, what is the CGU for an individual magazine title? So you are required to identify the CGU. Any thoughts? What is the CGU here? Tell me quickly. What is the CGU? Over to you quickly.
Publisher, sir.
Publisher. What do you mean by publisher? You mean to say the entity as a whole, is it?
Yes, sir.
Okay. Anyone else? Pawan says GU is the CGU. CGU is the group of magazine titles. Okay. What about others?
Sir, each magazine title, because cash inflows are getting generated from the direct sales and advertising
Okay. Anyone else?
for each magazine title.
Sure.
Okay, sir.
Anyone else? Quickly. Quickly, yeah. Everyone, try to answer this. What is the CGU? Sridhar says individual magazine title is the CGU. What about others? What is the CGU? Then Lakshmi says CGU is the customer segment. Okay. Gayatri says individual magazine title. Akila says 230 is CGU. 230 means what? 150 plus 80. So you're saying there are 230 CGUs, is it? Maybe you're just trying to tell me the numbers of number of CGUs, is it? Okay. Anyone else? No? So let's look at this, right? It is likely that the recoverable amount of an individual magazine title can be assessed. Even though the level of advertisement income for a title is influenced to a certain extent by other titles in the customer segment, cash inflows from direct sales and the advertisement are identifiable for each title. In addition, although the titles are managed by customer segments, decision to abandon titles are made on a individual title basis. Therefore, it is likely that individual magazine title generate cash inflows that are largely independent of each other, and that each magazine title is a separate CGU. Clear? Right? So I think we can look at one more. Okay, so let's look at this. I think we can look at this question number 9. Okay, so let's look at this 9. Okay. Good Drugs and Pharmaceuticals Limited acquired a sachet filling machine on 1st April X1 for 60 lakhs. Okay. So they acquired a machine. Machine was expected to have a productive life of 6 years. So that's the life. At the end of financial year X1, X2, so it appears to be the next year, carrying amount was 41 lakhs. A short circuit occurred in this financial year, but luckily the machine did not get badly damaged and was still in the working order at the end of the financial year. So it's X1, X2, right? Machine was expected to fetch 36 lakhs if it is sold in the market. Machine by itself is not capable of generating cash flows. However, the smallest group of assets comprising of this machine also is capable of generating cash flows of 54 crore per annum and has a carrying amount of 3.46 crore. Okay. All such machines put together would fetch a sum of 4.44 crore if disposed. You are required to evaluate the impairment loss, if any, in the given situation. Over to you. So do you have any impairment here? If yes, how do you calculate that? And how do you allocate that? Over to you. Quickly. Over to you. How do you calculate impairment, if any? So I'll just wait for another 2 to 3 minutes. You can solve this and share the answer, right? Gayatri says there is no impairment because the carrying amount of CGU is lower than the recoverable amount. Kambira says recoverable amount is more than the carrying amount. Okay. What about this? Yes, quickly, everyone. How do you compute impairment in this case? And what is going to be the amount of impairment? How do you allocate that if let's suppose you get impairment? Then Lakshmi is saying CGU cash flow is more than carrying amount, so there is no impairment loss. Okay. Akila says there is no impairment loss. Pawan says there is no impairment loss. Okay. Anyone else quickly?
Sir, because the carrying amount and the recoverable amount.
Because is for what? Tell me the answer first of all.
Sir, here is not applicable of impairment loss because feasible amount, which is the recoverable amount, which is in the carrying amount. Therefore, we not taking up impairment loss.
Okay.
As
others? Yes. Do you want to add something to this? All right, so let's look at this, right? So now in this case, what is the objective? Objective is to compute impairment. Can you do this at an asset level? It doesn't seem to be the case, all right? In this case, related CGU, which is a group of asset to which the damaged machine belongs, is not impaired. And the recoverable amount is more than the carrying amount. So that's why when you go to the CGU level and you don't find any impairment, so what will happen to that machine? You will continue to keep that at carrying amount. You will not bring it down. So it appears it may have an impairment, but you can't compute that. Why? Because either you compute the recoverable amount for the machine, which in the given case you are not able to do. Okay, so that's why what will you do? That's why you will have to get on to the CGU level. At the CGU level, you will have to do that assessment, right? Clear? So now let's look at one more. From the following details of an asset, you are required to compute the impairment loss. How do you treat the impairment loss? Means where do you take it? P&L, reserve, somewhere else. And once you compute the impairment, if at all there is any, you are also required to calculate the depreciation. So the cost of the asset is given, useful life is given, salvage value is nil, current carrying value is given. So cost means original cost and the current carrying value is given. Useful life, which is remaining 3 years. A recoverable amount is given. Upward revaluation was done in the last year, amounting to 14 lakhs. So this will help you in the treatment of the impairment loss if there is any. Over to you, quickly. You are required to compute 3 things. Correct? Yes. Over to you, quickly.
Sir, first I calculate the depreciation for the current year through the current compare with the cost of asset. We reduce the current carrying value. Then we got it the depreciation from 56 minus 27.3. So 28.7 as our depreciation for the current year and 56. And with compare with the recoverable amount with the current carrying value. So we got the impairment loss because recoverable amount is less than the current carrying value.
Right.
So 27.3 minus 12. We create a provision as an impairment loss 15.3.
Okay. And what is the accounting treatment of that impairment loss? So Gayatri is getting an impairment loss of 15.3. The same answer I've received from Akila, Pawan. Okay, very good. So that's one part to the question. What about its accounting treatment? And what about the current year depreciation? Okay, so there are three parts to it. So it's good you have been able to calculate the first one. What about the other two? What should be the accounting treatment? And what about current year depreciation? Tell me quickly. I think Gayatri has answered the other part as well. Just give me a minute. So Gayatri says 14 lakhs of impairment loss out of 15.3 will be adjusted against revaluation reserve. The balance amount 1.3 lakhs will be charged to P&L. All right. Sridhar says this entire amount goes to P&L. Very good. Pavan says 14 goes to, I think, revaluation reserve. Okay. Same what Gayatri answered. Ankila says 14 will go to, I think you're not talking about, see, revaluation reserve is the word you need to use. Good. Sridhar has calculated the current year depreciation also. Very good. So Sridhar is getting current year depreciation as 4 lakhs. What about others? Quickly. What about current year depreciation? I've got one answer so far. What about others? I'm just waiting for you to calculate that. Okay. What is the amount of depreciation for the current year? Okay, Gayatri is also getting 4 lakhs. What about others? Pavan is also getting the same answer. Then Lakshmi is also getting the same answer. Very good. So let's look at this. I think you are largely through with this. Okay. See, if let's suppose there is any revaluation reserve or there is any revalued asset on which you are charging the impairment loss. So that's what you will adjust against the revaluation reserve. Correct. Now the current carrying amount, including the revaluation, means you can say the revised carrying amount, which was revalued in the past, is what? 27.3 lakhs. And do we have the recoverable amount? Yes, 12 lakhs. So what is the impairment loss? Quite straightforward, 15.3. Now comes the question that what is the amount of revaluation reserve? See, if let's suppose last year there was a revaluation which resulted in upward value of 14. So this increase would have gone to revaluation reserve. Yes or no? So that means there must be a revaluation reserve amounting to 14. So what do? You will make that 0. You will make that 0 now. So this impairment loss of 15.3, where do you take it? Revaluation reserve first of all. Correct? And the balance amount, obviously, see, every time if you have an impairment loss, it has to go to P&L only. But there is one exception. So if let's suppose you consider that exception, so entire amount which is balance, where do you take it? It has to go to P&L only. Right? Now, there's one more part to the question. That if let's suppose you have done this calculation sort of, okay, now what do you do? So now your revised carrying amount is what? 12 lakh. 12 lakh. And what is the remaining useful life? 3 years. So that's why what will be the depreciation for the current year? Simple. So the revised carrying amount divided by the remaining useful life. So what will be the amount of depreciation? 4 lakhs. Simply. Right? It has to be 4 lakhs. Simply. Correct? Now, let's pick up one more. Okay, so let me just go back. Let's look at this 7th question. An asset does not meet the requirements of environmental laws which have been recently enacted. Means if you look at the requirements of environment laws, you will not be able to recognize that particular item as an asset. And as per the law, therefore, this asset needs to be destroyed. So currently it appears entity has recognized an item as asset which doesn't meet the criteria of asset. The asset is carried in the balance sheet at year end at 6 lakhs. Estimated cost of destroying the asset is 70,000. How do you think it should be accounted for? And what is the basis you will follow? Over to you. Quickly. How do you think you will record this? And what is the basis you will follow for this? Quickly. Over to you. So what should be the accounting treatment? Tell me quickly. In this case, what will be the accounting treatment? Anyone? See, this is not about numbers. This is more about the concept. Huh? Yes, I think somebody wants to answer this.
Yes, sir. This cost of destroying 70,000.
Yes.
We will the 6 lakh in the balance sheet, it will be there. So 5,30,000, I will take it to the profit. Both will go to the profit and loss. One goes to the credit side, one goes to the debit side.
Right. But what is the accounting concept? Which accounting standard you are applying for recording this? Anyone? Any thoughts? So let's look at this.
Sir, the cost of destroying will come under AS 10.
So let's
because
look at
we
this.
have to.
No worries. So let's look at this. Huh? See, in the given case, the recoverable amount will be nil. Why? Because value in use is nil. You can't continue to use that in the business. So your cash flows are going to be nil. And the net selling price is negative 70,000. Negative 70,000. So therefore, you have an impairment loss of what? 6 lakhs. So this asset needs to be fully impaired. Where will the impact go? P&L. When the amount estimated for an impairment loss is greater than the carrying amount of the asset to which it relates, entity should recognize a liability if and only if that is required by another accounting standard. Hence, entity should recognize liability for cost of disposal of 70,000 as per which accounting standard? AS 10 and 29. And what do you call it as? Decommissioning cost or dismantling obligation or asset retirement obligation. Clear on this? Yeah? All right. So with this, we are through. Any questions, any doubts, if you have, please let me know. I also understand, I think there was some query around the WhatsApp link. So I don't remember. If you can just help me with your email ID so that I can make a note of that email ID, and I would request the concerned team to send you the WhatsApp link. Maybe if you are around, I'm not sure who raised that query. So there was a concern that you are not getting the WhatsApp link. Quickly, who was that? Are you around? Okay, so Gaurav is there. So Gaurav is not getting the WhatsApp link. Okay, Gaurav, I have noted down your email ID. Okay. Okay, so I can see a lot of email IDs coming up. It's very difficult. If you keep sending, I think Anil has the same query. Okay, no worries. So then what I will do is I'll just request the concerned team to maybe send it across to all of you. Okay, I think that is better, right? because otherwise it becomes very difficult for me to note it down. Okay.
Sir, under illustration 3, sir, that enhanced depreciation, 1.70 minus 1 is there, no, sir? That 1, how did we get, sir? 1.
No, so you forget about that calculation. So very simply, you look at the proportion. So out of this 2.1, which pertains to 3 years, what do you have? You will go by the proportion. So that's 1.4, which belongs to the calculation that we did, and 0.7 pertains to the amount which is pending. Simply, let's keep it simple.
Okay.
Okay. So I think with this we are through. We can close this session now. Thanks everyone once again for your time today and for this wonderful participation. Yeah, thanks so much. IT, we can close this now.
Thank you, sir.
Thank you.